Imagine a number, then treble it. You know, that's where I'm at right now. I just can't get my head around it all, Mandeep. How are these companies going to spend $650 billion this year? What on?
Yeah, look, I mean, I think everyone highlighted supply constraints and the fact that they didn't have enough capacity, otherwise they would have grown faster. So that sort of justifies the increase in Capex. But you're right. I think the kind of increases we are seeing, probably Google is the only one who has earned it because their cloud revenue grew 48% and the infrastructure side actually was north of 50%. And they're doing it at, incremental margins of at least 30-40% compared to an Amazon where the margins are going down. And yes, the growth did accelerate, but it's coming at the expense of margin. So to my mind, there is this rush going on in terms of securing supply at TSMC. And the bigger you are, I think the chances are you have a better shot at securing supply. But if you add up all the Capex, which you have on the screen, TSMC cannot make as much in terms of, the needs that these companies are highlighting with their Capex numbers. So they have to significantly ramp their own Capex, the semi-cap equipment purchases to be able to service this kind of demand that they're seeing from the hyperscalers. So it'll be interesting to see what NVIDIA guides to, because NVIDIA hasn't moved. I mean, NVIDIA should be up, right, with all the Capex increases. So there's something that at least limits right now in terms of what kind of upside NVIDIA may end up seeing because of these Capex increases.
So, Mandeep, here's my question for you. What do you think we hit first, serious supply constraints or the limits of investor tolerance?
I think we are already seeing some sort of investor panic in terms of the free cash flow expectations for this year and beyond if this rate of Capex continues. Because for public cloud businesses, the baseline Capex was more around $40-50 billion. Now we are 3 to 4 times that. If that doesn't translate into revenue at the same pace, and yes, you have to invest upfront to bring the capacity online, but at some point, you have to ask yourself, if I'm doing it, at the expense of margins and free cash flow, how long do I sustain? And that's where the questions were asked for Oracle. I mean, there was a pushback with Oracle because everything was tied to OpenAI. I don't know who are going to be Amazon's customers for the $200 billion in Capex. Is it all inferencing, or is there a big training component? Because inferencing workloads are the only one that translate into cloud revenue. Training is more of a sunk cost. Yes, you're going to get a better model, but you're not going to be able to monetize it right away. So all these questions, I think, will become clearer as we go through probably the next 2-3 months.